Hello everybody, I'm going to be going over trading basics. First thing that I think you guys should understand is the layout of the chart that we're looking at right here. We're looking at, well, you don't need to worry about this right yet, but what are we looking at? So in trading, there's going to be a sell, a buy button, and the rest up here. First, what I'm going to tell you is what a sell button does. A sell button is, let's say, you see these candles, right? I will explain what a candle is, but look at these candles. If this candle goes down, that means that you'll get money. If this candle goes up, you'll lose money. Simple as that. Now, what is a stop loss? It's pretty common sense, but I'll tell you if you don't understand it. A stop loss is where you put basically an order. You put an order somewhere. So if price comes up, well, I wish price came up, but let's say price came up and hit your stop loss. That would take you out of the trade immediately. So it's like, oh, I don't want to lose more money than I do at, let's look on the side right here, at 21,990, 21990. I want to make that my max loss. That's where I think that that's where I'm okay with losing money at. Like I don't want the trade to keep going. Because if you didn't have one in a sell scenario and oh my gosh, example's not working out, but for example, let's say that you did a sell order and you don't have a stop loss. Price could come up all the way up here, come up to this level right here at 22,014, and you would lose so much more money than if you put a stop loss at 21990. That's what it is. And what is a take profit? A take profit is, oh, I want to take profit. It's another order, but it's where, oh, I don't want to let the trade keep going. I'm fine with taking this much money. That's the simple of trading, and that's not trading, but this buy and sell button. So sell button, stop loss goes, if you like, for example, stop loss goes on top, take profit goes on the bottom, and then vice versa for buy. So it's like this. Like your stop loss would be on the bottom, take profit would be on the top. That's literally the most simple way I can explain it. Now that you know what that is, I'm going to go into the kind of layout right here. Okay. Now, what does this mean? This means, well, actually, I'm going to go first into candlesticks. What are candlesticks? Candlesticks are what you see on this chart right here. So let's actually not focus on everything behind this line. Let's focus on this one candlestick, and then I'll draw a candlestick out for you guys to see. Actually, I'm going to skip one more candle because this one doesn't have a wick. Okay, there we go. Forget everything past this line. Don't even think about this candle or anything behind it. Think of only this candle right here. Now, what do we see? For your chart, so I'm just going to write this out so you guys can understand. Green on your chart is white on mine. Red on your chart is pink on mine. I just customized colors because I like the colors like this. But, so, a green. How does a candle work? A candle opens up for a up close candle, which is a candle that goes up. See how this candle went up? And do you want to know why? Because let's actually draw this out right here. What happened right here? Like, look at where my crosshair is, or my cursor is. Price opened up at 973.25, 21973.25, then what did price do? Price moved up all the way to 974.75. 21974.75, meaning that in the time of this 1 minute, because we're on the 1 minute time frame means every candle here is a span of 1 minute. So this candle took 1 minute to form. Same with every other one behind it. But look, this means that for this up candle, we opened up at 973, and then we closed at 974. If you guys can see that number, the number on the line. Now, that's the candle body, okay? This area in here is a candle body. It means price moved up this high during that 1 minute. I mean, not moved up this high, but this is where price closed. This is price went up, and then price opened up here. Price opened up because this is where price started. Price opened, and then closed at 974. Now, what is this? This is the candle body. Remember that. Now, what is this? This is a candle wick. What does a wick mean? What does this wick tell us? That's what we're trying to answer. This wick shows that price opened up. Well, just for the wick, I'm going to tell you this. The wick shows that we moved up this high. So, for example, let's say like this is live, right? We started right here, moved up this high, but then the candle couldn't stay up there, like the body couldn't stay up there, and then it pushed down this low, and then it closed there, and that's where that 1 minute of price, which is the number on the side, that's our price, 1 minute of price closed. That's where we stopped at. We started here and ended here, but we did go here. Same thing for the other side of the wick. We went here, but then we pulled up. Remember, the open will always stay the same. The open won't be affected. The close can be affected. The end of the wick can be affected. The bottom of the wick can be affected. But the open will always stay the same. When you see that open happen, it will not change. It's not going to move the open, because that's where price started. Price can't change where it started, but price can change where it ends. That is basically what wicks are. And for down close candles, I'll find an example right now. It's basically vice versa again, but I'll show you guys an example. I want to find a wick for you guys. Okay. Same thing with this one. We open up at, look on the right, 979. Then we move all the way down. Well, you can say that price moved up to 980. Price move all the way down to 976 on the right. Keep your eyes on the right. And then price went back down up here and closed at 978. What do wicks tell us? Where price has gone but has not closed at. That's what wicks tell us. Okay, now you guys know what wicks are. I'm gonna try to go over a little bit more basic stuff, but first of all, these are candles, obviously, like I said, and on the right, where you see, I'll tell you the abbreviations and meanings right here. What is 1 point? 1 point is equivalent, I don't know if I spelled that right, sorry, to 4 ticks. Now, what does this mean? Like, what is a point? What is 4 ticks? 1 point is $1. That is what it is. So if price went up from 980 to 981, you could say price moved up 1 point. You could also say that price moved up. Price 1 point is 4 ticks. You could say price moved up 4 ticks. I mean, obviously, you don't really have to this is not like a crazy important part of your trading, like you need to know this, but it's pretty good to know. And what is a tick? How much does a tick cost, I guess? Like, what is the equivalent of a tick? A tick, one tick equals 25 cents. 1 point is $1, divided by 4 ticks. Since 4 ticks is in 1 point, it would be 25 cents. You get it. Now, going over this, what do indicators show you? Indicators show you their own specific things, and I mean, you can make them if you know how to code. It just shows, like, for example, I have one on right now. It shows the time of a session. I know you guys don't know what that is, but it basically shows a time zone, basically, like a part of time in the charts. So it'd be 8 to 12. It would list out the whole box and say, this is how many candles were in that time area. Now I'm going to go a little bit more over, what is it called? Time frames. Let's look. This is a span of 5 candles, right? We see that? Do we see that? I hope you guys do. 1, 2, 3, 4, 5. 5 candles right here. And what does that form? This, well, actually I think it's, no, yeah. This singular candle. Basically it shows like how much price moved within that. Like one candle shows how much price moved in 1 minute. And this, it's basically just how much price moved in 5 minutes, but in one candle. Basically, that's all it is. Sorry, I was checking something. Same with 15-minute. The time frames that I have up here, you do want to save. They're good for later on. And yeah, that's basically all I can tell you. Also this, I'm going to be telling you all the like indexes for things that you can trade. You can trade options. Obviously, I mean, the problem with me is I have no idea how options work, but I trade futures, which is strictly NASDAQ. You can trade ES. I mean, anything you want, you can trade. What is Forex? Futures, I'll go over this first. It basically holds like stocks of everything, I guess. And this is the price of gold right here that I'm looking at. Forex is basically world currencies, so you can see US dollar and Japanese yen, all that. That is Forex. Crypto is Bitcoin, very popular, I know. It's Bitcoin, Ethereum, and that. Indices is SPX, S&P 500, and then just different versions of it. Yeah. And I mean, you can trade any one, but personally I trade NQ, which is NASDAQ, and that's what I stick to personally. Now, I'm going to be going over a high and a low. I'm going to actually go all the way back here. A high is, well, I know TJR teaches them pretty well, but I'll be teaching you the formation right here. A low is consisted of by the way, I don't know if I said this. I know I'm not really that good at explaining beginner stuff because, I mean, I'm not a beginner. I've been trading for 9 months as of recording this video. And basically, I'm going to tell you a bullish candle is when price goes higher, closes high, like closes up. A bearish candle is when price closes down. Now, a swing high and a high and a low, I like to call them swing high and swing lows. But technically, a low is made up of a one bearish, and the middle one honestly can be any. I'm gonna just use swing high and swing low, but the middle one in the middle right here, like we're not even looking at this one, okay? Don't look at any other candle past these three. The first one has to be a low, and the second one has to be a high. I mean, not the second one. The third one has to be a high. The second one can be really anyone, to be honest, because price could have went down here and then. But why does it create a swing point? Because I'm gonna try to draw it out. It's kind of making like a swing, like you know how a swing works, like you like let's say like you swing your arm like for a fight or something. um, Basically it means that it will like fall. Like, it's like a curve basically. See how this curves? A swing will curve. That's why we call it a swing low. This is a example of a swing low, by the way. I say swing high and swing lows because a low is a swing low and a swing high is a swing, like that. Now, how is the third one going to work? I mean, not third one. Second one can be any candle you want. First one can be any. First one has to be a bearish. For swing low, formation is first, write this down. First, bearish. Any color can be for the second, and then bullish for the third. Okay? Now, for a swing high, what does it have to be? Just know that you have to like think of like the way it looks, honestly. Because actually, we're gonna look at this example because this one is better. But don't look at any other candle past these three. Why do you think I chose this for a swing high though? Because why? Price makes a swing. And what are the candles? The first one has to be a bullish candle. The second one, any color you want. Any color. Bearish or bullish, it doesn't matter. Third one has to be a bearish one. Now, let me show you an invalid example of a swing high. Okay. Don't look at any of the candles past these three. Why would this not be a swing high? Because, first of all, first candle is not bullish. Second candle is, what is it called? Oh, sorry. Second candle, right here, is bearish. It can be that. But why is this not a swing high? Because we have three bearish candles. It has to follow just a rule of thumb. Are these three candles in that box, these three, a swing point? Yes. Although you might wonder why, because I just said that the first one has to be bullish, which it is, but the third one has to be a bearish if you want to make a swing high. It does, but at the same time, price on lower time frame doesn't exactly, almost on every time frame doesn't have exact closure. Like you get some slippage basically. Like its price slips a little bit and it can close bearish. But we can see, that price went up. But why is this still a swing high? Because if you look, we created that little swing formation. This is a swing high. This is a swing low. This is a swing high. 3 candles under that one. I'll look for some more. You could even say this is a swing low. This is a swing low. This is a really nice swing low. Swing high, right here. Swing high, right here. You don't need to follow the candle sequence as much as you do, but you do need to follow how it looks. Like if it is straight up like this, that's not, what is it called? That's not a swing point at all. It's not a swing. Now that you guys know what candle is, what you guys know what high and low is, I'm gonna teach you guys what a bearish trend looks like and a bullish trend. Now remember, what does the word bearish even mean in trading? I'm gonna give you guys 3 seconds. What does it mean? Do you guys say downwards? Yeah, you're completely right. Oh, yeah. What does bullish mean? I'm going to give you guys another 3 seconds. Downwards? Absolutely not. No, it means going up. That's what it means in trading. Now, what does this look like? Just off your eye, okay? Look at where this arrow's going. For I'm gonna draw this just for you guys. Look with your eye. Which direction is that going? Up, right? Yep. So what does that probably mean? What type of trend are we in? A bearish or a bullish? I'm gonna give you guys 3 seconds again. A bullish, yes, absolutely right. You guys are amazing. This is a bullish uptrend. There you go. And a bearish one, you guys can find it on the left side right here. Oh, which way is it going? Down. So we're probably in a downtrend, which is a bearish scenario. Up is bullish, down is bearish. Now, there's also a third way that price moves. And you guys can ask, you guys are wondering, what does that mean? I mean, price looks like this. What would you call this? This area right here. In fact, you could draw this whole area out and say, what is this? What does this look like, guys? It doesn't look like it's going up. And it also doesn't really look like it's going down. Like at this point. Not anything past here, not anything before it. In this box. What would you call this? This is called consolidation. Not bullish or bearish, a consolidation. Why? Because price is moving sideways. It's not moving in one direction, it's moving sideways. Now you guys know these very simple and basic. I'm going to tell you guys what a break of structure is. Okay. Now, you need to remember that trading is definitely not something that a lot of people are good at. But at the same time, trading is never 100%. That's why people always refer to trading as gambling, always say, oh, it's gambling and this and that. But personally, from my experience, I've seen way too many people win. In like people that I know, not people on TikTok saying, oh, I got a Lamborghini trading in one day. No. I've seen people win that I've known and I've seen proof. So if it's possible for them, it's not impossible. Now, back to this. Trading is not 100%. But we can follow the general rules that make it most probable. So we can figure out, oh, this is probably how it's going to work out. Not it will work out. Not to this level yet. You got nothing over here is over 30% chance, okay? But it's a very good chance that it'll work out. Now, what is a break of structure? Look at how price is moving. Price is moving down, right? You can say, oh, price is moving down in a downtrend at this line, okay? Nothing past this line. This is an uptrend. This is a downtrend. Now, what do we see right here? Oh, Gavin just taught us this. This is a swing point. Great, guys. You guys have good memory. Oh, my goodness. Now, at the end of the swing point, what did price do? Price came back down and pushed lower beneath that line of that swing point. What does that mean called? This is a break of structure. What does it mean? Price is probably going to keep following that direction. So let's look. Price hit this, pushed a little bit lower. You do not take trades off of this. This will not give you any profitability if you take trades off this. You'll probably lose more than you win. But yeah, that's a break of structure. Basically, price continuing a trend when it hits this line of that swing point. Okay, I'm going to try to show a bullish scenario. Oh, right here. Here's really nice. Swing point, up. Middle candle, we don't know. Third candle, swing high. Third candle goes down. Mark out top of that, the highest point. Price hit it. Went up, dropped down, went up. Price will usually never go in like a direction like this. Like straight like straight up, like completely straight. Price will always take retracements to fill imbalances. I know you guys don't know what that is yet, but it basically fills areas in the simplest ways that I can explain it. Price tries to fill imbalances to push higher. That means price is going to come down into boxes, into areas, in gaps and places, and then push higher. Price can never continually push higher unless there's some news event um, like Jerome Powell speaking. Jerome Powell is the federal chairman of the chairman of the Federal Reserve. Yep. But price will usually always take tiny retracements or large retracements. Just know that it will take retracements to push higher, unless there is some different way that like something's happening in a scenario. But see, we hit this, pushed a little bit lower, and then pushed higher. Now that you guys know what a breaker structure is, that was a bullish breaker structure. This is a bearish breaker structure. What is a market structure shift? We can see it right here. It's the swing high or swing low when price reverses, basically. Like it's like, oh, price is changing the way it's moving. So it's going from bearish, like we see, to bullish. And we can see that by this swing, okay? We close above this swing and say, you could literally say, oh, I think price is going to move higher because we closed above a swing high. Why wouldn't this be a valid market structure shift? Because we didn't close over it yet. This is a wick. Remember, a wick does not do anything for market structure shifts. When it closes over a market structure shift, that's valid. So this would be our valid market structure shift because price wicked into this, like price wicked into this line. You can see the wick basically took out that market structure or swing high and pushed a little bit lower. The price pushed up, closed over that swing high. Then price continues higher, like we see, market structure shift. So that is literally the market structure for you. Let me see if I can have anything. I'm not going to go over liquidity yet, but if you guys want, you can do homework, and it's going to be just to understand these concepts a little better. But look for 5 breaker structures and 5 market structure shifts, and 5 swing highs and 5 swing lows. I know it sounds like a lot. If you want, you can do like 2 for each one, but just find at least one example of each of the things I've talked about in this video. And I mean, then you'll be pretty good off for market structure right here. I mean, it's not that hard at this point. I mean, it'll probably be confusing. If you have questions, ask me for sure. But yeah, I mean, that's basically all it is to market structure. I'll be going over liquidity next. See you guys later. Have a nice day.